The current market volatility is a perfect opportunity to explain the benefits of dollar cost averaging. I'm going to share my screen to illustrate the point. This investor is currently receiving $500 per pay run from the super guarantee that is being paid into his super fund from his employer. Hers. The $500 per pay run is purchasing units of investment in their super fund. And every time that the market moves either up or down, the investor is purchasing units at a different price point. So the way that it works is in, let's say, January, $500 was contributed, and the price of the units inside of the super fund in the fund that they were purchasing at was $50 per unit. So that $500 divided by the price is equal to the amount of units that was purchased. So in the first month, 10 units were purchased. The total value is $500, and the investor now has 10 units at that price point. Now in February, the employer is still putting in $500 every month, and in February, the market went up, i.e. the price per unit went up. Therefore, the same amount of money that was put into the super account is now divided by a new price point of $55 because the market went up in February. Therefore, the same amount of money divided by the new price point gives you less units. So now this investor has put in $500 in January and $500 in February. So the two together is $1,000. And now this investor has 19 units. And so it goes. Now in March, as we know, the markets have corrected. So for this example, the unit price is now lower. Therefore, the same amount of money divided by the new unit price is now purchasing more units. So $1,500, this investor has now got, let's say, 30 shares, 29.51, and so on and so on. So the price, it recovers in April, and you buy more units, and the price then drops again in May. There's an old adage, a very old adage, that sell in May and go away. So the price drops again in May, and the investor is still putting in the $500 thanks to his employer and purchasing units at different price points. So in June, the market corrects a lot. So now your investor has contributed a total of $3,000 and has a total number of 59.97 shares. So if we then go to this dollar cost averaging calculator for the purposes of this example, and we have a look at the example that I've been using, you will see that the average cost per share is 3,000 divided by the number of shares purchased. So therefore, the average price of those shares is in fact $50, because you take all of the shares divided by the number of months that you've purchased them, and you take the amount of money that you've invested and you divide it by the price. So your average price is $50. Okay. And this is how dollar cost averaging averages out a market that is volatile. So you'd like volatility when you are contributing to super consistently. I'm going to show you another example on how to use this calculator. So what I did here was I said that this investor was being paid weekly, and the amount of money that the employer is putting in for super guarantee is $50 a month. And I just had a look at a year for the last 12 months, just for purposes of illustration. So from April last year to April this year, this investor is $50 per week, despite the fact that the market has corrected. The total amount invested was $2,450. Notwithstanding the correction, the gain is still 2.94%. and the portfolio value is now 2,522. If we take this back, when the market was expensive, and we go, let's say, for example, to 2023, April to April, you can see that the market, because of the market going up and because of the consistent dollar cost averaging, the overall gain for 2 years was 13%. So what I'm saying is that despite the fact that the media is creating anxiety in your world, know that consistently doing the same thing over a period of time is what will get you long-term results. If you move out of your investments now, you are going to capitalize your loss, and it's going to take you a long time to recover from this very quick drop. Markets, by their very nature, are designed to have different price points over time. If you've got any questions or if any concerns, please find me. My name is Norma Falconer. I am the founder and director and principal financial planner for thinkcapitaladvice.com.au. Please reach out if you've got any questions.